Unprofitable yet tech rally. Hey everyone, it's Wolfgang. So this is about tech stocks today. An AI company went public, Cerebras. Let's talk about that. Why did stocks go up today? We're going to take a look at that company and a couple of other ones. Starting with gross profit margin. Gross profit margin is revenue minus cost of goods sold. Then you take that number and divide it by the revenue and you get the margin, the gross margin. So the gross profit margin for NVIDIA is 65%, at least for now, until the AI hype fades. This is going to be a recurring theme in this video. What is this AI hype doing to earnings for these companies? So I will explain that. Cerebras went public today. They have a negative 30.65% gross margin, negative 30.65. So that's almost 100% below NVIDIA. So why did they go public? How did they go public? The story gets even more interesting than this. So stay tuned. I will explain. AMD, they don't have a negative gross margin, but it's much less than NVIDIA's. It's 14.4%. They sell other than AI chips. They're not only AI technology. Intel, same thing. INTC, smaller gross margin, 6.88%. That's not very good for a tech stock. Generally, that's pretty low. 14.4% is marginal, but 6.8% is not great. Okay, so let's take a look at Cerebras IPO today. It's up in the first day of trading 68% at today's IPO. Okay, so here's where it starts getting interesting. Revenue is highly concentrated in only 2 customers in United Arab Emirates. So this company had their IPO today. The bulk, 86% of their revenue comes from just 2 customers. The profit, the GAAP profit, generally accepted accounting principles, was heavily driven by non-cash gain, by extinguishing a liability, basically. So as to whether or not the investors believed that this company had profit or not, who knows? It may have just been speculation that, this thing got bid up 68% at the IPO today. So non-GAAP adjusted, the company showed a loss, and there was a GAAP operating loss. So this company went public with 2 customers with losses. So a lot of AI investors are like a dot-com bubble investors. They don't look at the facts. They invest on hype and emotion. They're speculating. They're noticing that, oh, look, this stock is getting bid up. It's AI. I think I'll bid on it. That's a mistake. Okay. AI is not profitable. This is really important. This is an important part of this video. The way that large language models are structured right now, they're not profitable, almost across the board. People need to feel more confident that a return on investment is coming from the hundreds of billions being spent on AI. Julie Beal was on Bloomberg this morning explaining all this. So these large language models are not making money. They're not profitable. So when you look at Cerebras, it's up today. It's unprofitable, right? So here are some of the worst cases in technology right now. So you have to wonder, there was a tech rally today. What did these stocks do? Well, Meta is down 6.3% year to date from January until now. Microsoft is down 15.34%. Oracle is flat. That's surprising. They're in bad shape. I'm surprised that they're just flat. I'm surprised they're not down also year to date. So these companies, let's get into this a little more. Okay. Investors will not bid up prices on those stocks, right? Investors are not going to bid up their prices unless and until the hundreds of billions they're spending on AI starts to show a profit, especially Zuckerberg. Zuckerberg is throwing up failure after failure. The metaverse was a failure. They renamed the company Meta in honor of that failure. What a mistake. They failed at open source AI called Llama. They're pretty much abandoning making any money from Llama. So investors are not going to bid up prices on Microsoft, on Oracle, or on Meta until they actually start showing profit. Because these, unlike Cerebras, which went public today, Meta, Microsoft, and Oracle, they've been public for a while. There's no hype there. They need to make money. That will tend to be true for all companies eventually. After the IPO hype and speculation, they have to start making a profit. Okay, let's compare Microsoft, Oracle, and Meta to Google. Important comparison. Google does not buy much AI hardware. They produce their own TPU chips. And they plan to start selling them to start competing with NVIDIA. So instead of Google spending hundreds of billions on AI hardware, like a bad habit, They have their own technology, their own tensor processing unit technology. They've been working on that for like 10 years. They are going to be selling that. So Google's AI effort is self-funding much more than Oracle, Microsoft, or Meta. Google does not have a bad chronic habit of buying unprofitable AI hardware. Why do I say unprofitable? The way that large language models are structured right now, they are not profitable. I've repeated this in a few videos that I've done. When you have money to invest, you've got to know the facts. Do you really want to invest in this speculative hype, or do you want to invest in profitable companies? So Berkshire Hathaway bought 4.3 billion of Google stock. This is part of the reason. Google is self-funding their AI effort. They're not spending hundreds of billions of dollars. They're actually going to be selling their own hardware, AI hardware, to support themselves. They are self-reliant. Okay, so let's compare the self-funding AI effort, Google's, to the unprofitable, I call it an addiction, okay? Because these companies cannot spend money and fire people fast enough. Let's fire a bunch more people, take the savings from all the firings, and buy more AI hardware. Compare these two cases, the unprofitable addiction to buying AI hardware to what Google's doing. And that tells you what stocks to buy and which stocks to avoid. And guess which, and investors already know this, okay? Because Oracle, Microsoft, and Meta are not doing well this year. Yes, tech stocks have been rallying. There has been a rally in tech stocks, but these guys, there's no going public hype. They've got to show profit. They're not showing profit. They're just laying people off and spending the money. All right. So here are some predictions. There will be motions on the board. I know this is going to sound outrageous, to replace Zuckerberg. He had a huge metaverse failure, billions and billions lost on that. Llama, they're abandoning trying to make money from open source AI. Also, the replacement of the current CEO at Microsoft, it's already, most likely it's already being debated, okay? Microsoft products have devolved into junk, okay? You cannot even reliably get a restart or a shutdown on a Windows menu anymore. It's intermittent, it comes and goes. Sometimes it's there, sometimes it's not. That problem has existed for a while now. Microsoft is selling junk software. I think the current CEO is responsible, and I think he's going to be on his way out. If they don't fire that dude, he's going to sink that ship. Spending the billions on in this AI hardware addiction, firing all this staff, trying to sell junk products. No, it's Copilot is not doing well. Large companies are firing thousands of employees to feed their addiction to buy unprofitable AI hardware, chips and data centers. It's an addiction. It's like we can't fire people and spend the money fast enough and go into debt, in Oracle's case. All right, but some stocks did well today. The Cerebras IPO got speculators involved in the markets, buying tech stocks, pushing up stock prices. Whether it's a good reason or not, and it's not, because Cerebras is not profitable, it doesn't matter. There was a tech rally today. How much longer will tech stocks get bid up? Okay, the shareholders of these stocks will start being more insistent about reducing unprofitable CapEx, capital expenditures, the spending on AI. Shareholders of these companies will put their foot down and say, stop buying unprofitable AI hardware. Stop. It's not profitable. Stop. You're ruining the company. When that happens, when those big companies stop buying unprofitable AI hardware, NVIDIA will suffer and the tech rally will start to fade, okay? There's too much unprofitable CapEx spending on AI hardware. Eventually, shareholders will say, stop the unprofitable and massive CapEx spending. It will lead to lower tech stock prices, and the rally in tech will begin to fade. The current tech rally only works because of these companies. They have an addiction to buying unprofitable AI hardware. Okay, that is a chronic behavior of a lot of these large companies. They are blowing their money on unprofitable AI hardware. Once the rally in tech begins to fade, once shareholders say stop spending all this money, the tech rally will start to fade. So you have to think about this. Cerebras today went public, right? Okay. Eventually, they will put out their 10Q. That's the quarterly report. Cerebras will be shown as being unprofitable. It will finally start sinking in to investors that Cerebras has only 2 large customers, which is 86% of their business, and they have a negative gross margin. So eventually the tech rally is going to start fading. So tolerance for unprofitable failures. Meta, Microsoft, and Oracle. Oracle is teetering on disaster because of all the debt they've taken out. It doesn't make sense why they're buying all the unprofitable AI hardware with borrowed money and firing a bunch of people. It's starting to look really stupid. I mean, it's looked that way for a while, to be honest. Okay, so what is the catalyst? What is the event that will break this unprofitable spending? When companies go IPO like Cerebras did today and begin to publish 10Qs each quarter, then the investing public will notice that they are unprofitable. Even if these companies try to convince everyone, we're going to make a profit soon, we're investing for growth, the founders already made their money on the AI hype. They have a period where they can't sell the stock, but they will. Eventually the timeout will occur. The founders will they're banking on selling portions of their holdings to profit from the IPO. By the time the public realizes they're buying, I mean, Cerebras has 2 big customers and they have huge losses. Why is this company rallying? Why did it go up over 60% today? Irrational. It's speculation. The IPO is the catalyst that will create the scrutiny because the company then is public. It has to tell the public what it's doing, how it's doing in, with revenue. Is it earning money or is it losing money? So Anthropic, these are 2 companies that are supposed to go public this year. October for Anthropic. OpenAI was supposed to go public this year, but they're in court right now. They may not go public. But both of these companies are losing money big time. These 2 companies, Anthropic and OpenAI, are losing huge money. So should you buy the IPO with the hope that someday they'll be profitable? No, I wouldn't. I would not buy that's just my opinion, obviously. Okay, so what could turn things around? How could this situation be turned around? Because right now, AI is deeply unprofitable. So what would need to happen, there would need to be a pattern of profitable earnings from these large LLM companies, from the hyperscalers, making money on the CapEx investment. They would need to be able to say, we invested CapEx in AI hardware, chips and data centers and so on, and we got a rate of return that was very good or great. That could turn things around. But the public is going to wake up to this. Hey, these companies are not profitable. Let's sell the stock before everybody else realizes. There is one new company that is a ray of hope. Okay, it's called Inception. Inception is building a faster LLM. Their Mercury model is supposedly much faster. I believe the way they're tokenizing the input, the user input, is much faster, and their model is more efficient. It's faster. Something like that needs to happen. They need to, the AI industry needs to start being profitable. And it's not clear yet when that's going to happen. So I wanted to bring this up today because Cerebras went public. It's up 68% in one day, its first day of trading, needlessly. There's absolutely no reason people should have been scrambling to buy that IPO. And NVIDIA is doing okay for now, right? But if these large companies stop the addiction, the CapEx spending addiction, NVIDIA is going to suffer. So I would watch for that. So how do you protect yourself? You don't have to sell out all your tech. You can take a portion and convert it into a safer investment, like an S&P 500 index fund or treasury bonds, a portion of your total investments. And that way, if there is a big drop, eventually the public is going to stop believing in the hype, the AI hype. So if you have any questions, I realize these are, that Cerebras, especially today, they went IPO, it's popular right now, but it's important because this is our money. This is how we invest. We should know what we're actually getting into. And I just thought it was important to make this point. If you have any questions, please post questions in the comments. If you have an opinion, absolutely chime in. We all get a benefit from that. And I really want to thank everyone for watching. Have a great day.